what is your position in peripheral market at the moment, and what do you expect out of the summit later this month?
Our expectations for the coming weeks are not high, to be honest. We think there's a lot of scope for disappointment in the markets, mainly because much of what's already been discussed at finance ministers' meetings is already priced into the market. So I think the markets are set up for a little bit of a disappointment come the end of this on the 24th of March. The failure to deliver the stress tests until June or July will also be an added uncertainty. So I think it's unlikely that the markets will pull themselves out of that phase of mind, which is to anticipate further disruption later this year during the March process. Accordingly, we've kept a very low profile in peripheral markets. Yes, there may well be value. Portugal, Spain, Italy probably are the markets where we would consider looking for investment opportunities. I think Greece is no longer on the radar screens as its rating has fallen below the threshold of most of our investors. But I think at the moment we're standing back and we're waiting for opportunities which will be brought about more by clarity than by any change in market levels.
Okay. And what about higher interest rates? The market are now expecting the ECB to raise interest rate, and perhaps as early as next month. How do you position yourself in the higher interest rate environment in the sovereign debt space?
Yes, well, I think since the last ECB board meeting, when Trichet used these words which signalled that there would be a rate rise at the next meeting, the markets have moved to price that accordingly. So I think the market is already looking for that hike in the May meeting. I think thereafter it will depend largely on how the sovereign debt situation unfolds. So at the moment I think there may be a short-term buying opportunity in bonds as the yield level has risen, but it looks unlikely that the ECB will be in a position to move rates considerably higher in the first half of this year. So I think we may get one increase at the next meeting and then a pause until the ECB considers its next steps.
Alan, you talk about opportunity to buy Portuguese debt. What needs to happen for this bond to present value?
I think we need to have greater clarity. So we need to get to the end of the March discussions. We need to know how big the FSF or the ESM is going to be. And we need to know whether countries like Portugal are able to finance themselves through that facility or have to come to the public markets again and raise money at current yield levels. That looks unsustainable. The yield basis is too high. It continues to put pressure on debt to GDP ratios. So the short-term solution, and the reason why it would be of interest, would be if countries like Portugal had the opportunity in the short term to refinance at more attractive rates in order to allow themselves to grow out of this fiscal situation.
Thank you very much.